please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We are in for a good start. Stocks like Maruti should keep the market in the green, at least for starters. Devin Choksi now joins us, MD of Kia Choksi Investment Managers. Devin, good morning. Thoughts first on Maruti. What next here? We've seen most brokerages upping price target to 9,000 to even 10,000 now. Are you buying this stock even at these prices?
Well, good morning, Arunj. Certainly, I think Maruti remains a favorable play, and given the kind of a product launches that they have, next year the Swift is coming up in the market once again with a new model. So certainly, we are likely to see higher amount of growth coming in for Maruti, and it continues. Fortunately for Maruti, the Nexa brand has been a big contributor, and as we understand, Nexa brand has been basically, I think, driving more number of new customers. Approximately about 40% of the new customers who have bought, or 40% of the customers who visited Nexa who have bought, they are new customers. So certainly, I think this is one area where one is feeling more confident, and it is this brand which is giving them a little higher margin comparatively. So one remains fairly confident about Maruti and its strategy going forward as well. New model launches, better margins for the product, and higher amount of offtake. Volume is also improving. So all in all put together, I think we are positive. Correction in the market always gives an opportunity to buy at lower levels, and that should be the strategy to add the stock further into the portfolio.
Morning, Devin. So let's stick to earnings then and get your sense on the other index heavyweight. ITC, I mean, we've seen some notes this morning where brokerages seem to be disappointed with the kind of decline we've seen in volumes. What's your sense?
Yeah, good morning, Sulbi. Well, what I read is that in this particular quarter, some of the FMCG companies have had their trouble with the GST related stuff, and that could be one of the reasons for which the disappointment on the volume side. As I see it, the company ITC has been very well positioned now for driving larger amount of growth from the FMCG space in particular, and we feel reasonably confident about the strategy of ITC in coming period. So yes, I think on a quarterly basis there is a disappointment for sure, but to believe that the overall growth program for the company remains intact, and that's where the confidence level remains high on this company. Maybe one of the FMCG company where higher amount of growth projections are likely to now materialize in coming quarters. So certainly we remain confident on this company and its strategy going forward.
Okay. Good morning, Devin. I wanted to ask you about the PSU banks. Do you still look at any of them, or now you will wait to see the capitalization?
Yeah, Lata, good morning. Well, capitalization is a process now. Government has already announced it. It's for the RBI to now probably, I think, give the clarity on the subject as to which bank would have more amount of cash capital and which bank would have, I think, more amount of bond capital getting contributed into them. Reasonably okay with this kind of a program of the government as far as the bank recapitalization is concerned. In fact, I think my own take is some of the larger banks like SBI, PNB, they are likely to see major amount of benefit going forward. We believe that the process of selling of the NPAs which banks have booked will probably expedite, and that is where you are likely to see larger amount of credit coming into the books of the balance sheet, strengthening the balance sheet of the PSU banks going forward. So that's a good possibility. Whether it will happen in 1 or 2 quarters, I am not completely sure whether it can accelerate in that pace. But the fact remains that if you are planning for next 4 to 8 quarters, certainly some of the PSBs are giving you brilliant opportunities as far as the outlook is concerned, on the recovery of the asset is concerned, and probably stronger balance sheet thereafter.
Okay, Devin, as well as they get money, the expectation is that they will be aggressive in grabbing market share and bringing down rates perhaps. How do you approach the NBFC space in that context? Which ones will you stay with? Which ones will you shed?
So I think within NBFC space, those who are fully attached to the consumer financing, the retail lending, they are still very comfortable because the retail credit growth is continuing to be on a smarter side. Including the housing finance within the NBFC space bracket, we feel confident. There may be challenges for some of the NBFCs to fund the SME segments, but those who are retail focused, probably I think they might have relatively better times. And fortunately, some of the smart NBFCs have already expanded the reach through the digital network, their customer engagement program through digital network, subvention pricing program, I think by tie-up with some of the merchants or the sellers, is been extremely strong, and that's where I think one would feel confident that 30-35% kind of a credit growth with the consumer lending improving is distinctly possible. With the rate of interest coming down, I think this is increasingly beneficial for the NBFC on the profit side. So we don't see too much of a hiccups or the valuation derating as the market is fearing about, because we believe that there is a profitability growth and we believe there is a volume-led growth for the credit offtake for some of the retail NBFCs, and that's where we remain largely focused, confident also in case-by-case basis with some of the companies, of course.
Okay. Well, just 1 minute to go. We'll start getting pre-open rates. As we wait for that, Devin, now, you know, Shriram Transport has seen a 10% up move this month. IDFC has moved higher as the market started anticipating that this merger might not go through. Would you still be positive on these stocks, and who could be the biggest beneficiary if there is no deal?
Well, not too sure whether I have equally read the same way which the market is reading into the merger of these two companies. I still believe that I think both these companies coming together could be, I think, a stronger combination. And thus I believe that the IDFC per se, I think, could be a larger beneficiary. So would probably stick to IDFC for the time being, and we'll keep watching till the time they announce the larger details on the merger side.
Okay. Well, it's almost time for the pre-opening rates to come. So just hold on for a minute, Devin. The SGX Nifty indicated a 0.2% uptick. Okay, now it's a 0.25%. So we might start on those lines, but I really want to know how ICICI will move, and maybe even Maruti. It's got huge upgrades. The Nifty is starting with a 0.5% uptick. Sensex much better. The weight of ONGC is higher for them, so I guess that will be more. ICICI Bank is starting with 5%, and Yes Bank is starting with 3.5%. ONGC is 2.6%. Maruti is doing well at 2%. Sun Pharma, minor positive news coming in there as well, is up about 1%. But let's see how 1%. But let's see how much of this holds. At the moment, only some of the metal stocks and Axis are showing a little bit of red tick, and the big boy Reliance. But we'll have to wait and see. How do you approach Yes Bank, Devin? Okay, Devin, we'll come to you in a minute. Actually, we've got some results, reactions coming in. Bharat Financial has written off about 470 crores of non-performing assets this year. Abhishek Kothari, our colleague, caught up with Mr. M.R. Rao, and he has begun by asking him how much of this amount they hope to recover.
What is happening is we have seen signs of improvement in UP and states like Karnataka. On Maharashtra, it is a bit slow. We are confident that we have guided that our NPAs would be about 432 crores. We'll always be below that guidance. While this 471 is a point-in-time number, we are confident we'll recover some of it. We are also confident that 432, we will not cross the 432 crore number. But this is a timing impact. In the next 2-3 quarters, we'll see signs of this 471 coming down to less than 432 first, and a bit more also will come back to us.
You spoke about a few states. So does that mean that your target market size market now shrinks, and therefore, you know, few districts will be blacklisted, or where you are seeing intentional defaults, you will actually pull off from that market?
No, our approach has been that where a borrower has repaid her loan, irrespective of where she is, let's say even in the districts that where we have a higher number of defaults, where there is a set of borrowers who have repaid on time, notwithstanding demonetization or the elections, that borrower for us is a very good borrower, and therefore we will continue to lend to her. So we will not move out of any district or state, but we will move out of those villages where there is no recovery happening. On the other hand, in a village, let's say out of 30, about 20 borrowers are repaying us, we'll certainly continue to be there, notwithstanding the fact that 10 borrowers are not paying. We will not lend to those 10 borrowers who are not paying, but we will not walk out of that village. On the other hand, if the entire village is not paying, we will not get into that village again.
With the IndusInd merger, now cost of borrowings will reduce for you. So how do you intend to pass on that to customers? And also, how will you improve your product offering to customers once you have a banking product also available with you?
No, I think one, cost of borrowings is a straight benefit that we get. But there are more benefits at an operating level that one gets. If you are able to open savings account for all the borrowers, which is the plan, if you are able to get these borrowers to park their small savings in terms of recurring deposits, which they have done as a pilot, and which the demonetization has proved that people who opted for a recurring deposit product, their repayments were far superior in the same village, same center, as compared to the non-recurring deposit customers. So,
okay, that's Bharat Financial. In fact, just coming back to some of the result reactions that we are getting for the time being, Ramakrishna Forging, that one of the smaller companies that we were discussing, which had blowout numbers in the pre-open, that stock's up almost 20%. And some of these group stocks, the deal, I mean, they're very excited. Shriram City Union, for instance, is up about 11-12%. IDFC is up 3%. We're just discussing this. Shriram Transport also in the green, for what it's worth right now.
Maruti, I think, would be the stock to watch in the morning trade. That stock is up 2%. Surabhi, I don't know the rate on Sun Pharma. I mean, if this is right, for starters, that stock is opening 3.5% higher on Sun Pharma. So keep an eye on that. And ONGC, as we discussed in the morning as well. The clincher, of course, is going to be ICICI Bank. For now, opening about 2.5% higher. But let's see if that actually pans out in actual market opening as well. So that stock will be interesting to watch.
Fair point. It's time we invited Mr. S.P. Tulsan of sptulsan.com. Good morning, sir. Diwali is over, but the sweetness in sugar stocks remains?
That's right. And in fact, you know, Lata, I've taken this sugar stock, Dalmia Bharat Sugar, in spite that the stock was recommended by me on 15th July at 148. Then the stock has already given 25% gain. But the reason for recommending this, again, the revised positive view on the sugar sector post the announcement of SAP by the UP government. And in fact, I've seen, I've heard many of the analysts and all that, more of the commodity experts, giving a price target of 32 rupees on the sugar. That means it will correct by about 5-6 rupees per kg for all those things. And SAP, in hike of state advised price by about 10 rupees per quintal. There are some, kind of myth, or the properly market has not understood that. Let me just give you a small background here. Purchase tax, which was there earlier existing, for the last season, that got subsumed in the GST, and GST having effected from 1st July, so that there has been a straight saving of 6 rupees purchase tax to all the mills, those who will be starting now the crushing. And crushing always starts, after having closed in the month of April or March, always starts in the month of October, November, largely in Maharashtra and UP. So the SAP, which we have seen a hike of about 10 rupees per quintal, effectively will result a burden of about 4 rupees per quintal only. And that is seen extremely positive. And let me tell you that the millers and all were expecting much more hike than for 10 rupees per quintal. So that's extremely positive. Number one. Number two, the ethanol price hike is likely to be seen again now, maybe from the UP government also, maybe in the next 1 month. And that is expected to be about 3 rupees per litre, and if that comes in, that will again be a huge positive. Third thing, that because of this late monsoon, the recovery will increase in UP. Already UP has been seeing an increase on an average. Last season, the average recovery was 10.67 for the entire state, with many of the mills having a recovery of maybe as high as 11.75 also. But this time it is expected that from 10.67, probably it will touch maybe to about 10.9 or closer to about 11 because of the late monsoon having seen, maybe in this last 1 month, which will increase the sugar content in the sugar cane and will effectively lead to higher recovery going forward. Now, coming specifically on Dalmia Bharat, Dalmia Bharat will be having a dual advantage because they have 3 mills in UP, aggregate capacity of 22,500 TCD, and 2 mills in Maharashtra, 10,000 TCD. Maharashtra this year is going to show the production growth of about maybe 65 to 72%, a range of 65 to 72%, while Dalmia Bharat Sugar in its 2 mills will going to show a production growth of 90% to 100%. UP is going to show a production growth of 12 to 15%. One can expect a 15 to 18% growth for Dalmia Bharat Sugar. So going forward, if you really take a call, the scenario for this company is going to outperform the industry norm. Now coming again a myth that sugar industry is seeing a production growth of 23% this year. That is right, but that will not even be meeting the consumption requirement, which is at about maybe 25 to 26 million, 25 half to 25 million, 26 million, while the production is estimated at 25 million tons. So again, the prices will remain quite firm. It may not fall below 35 rupees or maybe even 36 rupees if I want to stick my neck out. So taking all this into consideration, the season has started with a quantity of not with less than 4 million ton, or if you really ask me, it is at 3.5 million ton, though ISMA is saying at about 3.5 to 4 million ton. So taking all this into consideration, the sugar industry scenario is very good. Coming quickly on this, I have already given 5 mills. If you see the financial performance of the company for Q1, they have already posted a record EPS of about 6.80, and if you can just extrapolate, this company should be able to post an EPS of closer to about 27, 28 rupees. This is the only company having promoter stake of 75%. Ooh. The balance sheet is very much in place. There are no sugarcane arrears, and we are going to see the record Q2 numbers and record FY18 numbers from all UP sugar mills, including this Dalmia Bharat Sugar as well. So taking that into account, share now ruling at 181 can move to a level of 217 in next 6 months or so.
Okay, Mr. Tulsian, thanks a lot for that stock idea. That's Mr. Tulsian's pick. He has, of course, been bullish on sugar stocks, and some of them have been 10 or 15 baggers over the last 2 years. Udayan Mukherjee is also with us now. Udayan, good morning. So once again, the market's basic template of buying all corrections or consolidations has worked. 10,350 as we speak on the Nifty. What next?
Morning, Anuj. The more important thing is that we've dodged this September-October period, which can be a treacherous period for the market. I mean, today is the last trading day or tomorrow for October, and we'll come out of it actually without a significant correction, which was a threat when actually in the middle of September when we spoke. We did have a correction, but it was not a significant one, just about 400 odd points or 500 points on the Nifty, not more than that, and the market bounced back very quickly. So now we are entering the late part of the year, having dodged the tricky autumn, September, October period. It seems quite conceivable given sentiment, flows, the global mood right now, and the absence of volatility that the market could move even higher in the near term. I don't know about targets because we are now in uncharted territory. So, I mean, you can say 10,500 or 10,600, but that's really the realm of the chartist. But it's probable that the market has some more upside in the near term. But I think this is the part where people start getting complacent because you've come out of the period without a correction. And I think most people will now probably assume that this year will not have a major correction or a meaningful correction, and volatility will become even lower. So I think you need to be a little careful about that because of the complacence factor. Otherwise, the momentum still looks strong and sentiment is still intact.
Okay. Good morning, Uday. Instantly, ICICI is in the red. 0.8 only, but clearly the RBI overhang is there. Speaking of RBI, of course, Udayan, your thoughts on this bank recap. First, the NBFC leg. Is there fierce competition coming 6 months down the line, and therefore the heyday of NBFC is over?
It's an interesting question, Lata, because I think the banking recap actually has made more investors unhappy than happy, because who owned public sector banks? Everybody was up to their gills with private sector banks and NBFCs, and they have actually not done very well. So it was nice to see PSU banks go up 30, 50%, but on that day, the fact that most NBFCs fell 4-5% and private banks too, I think it would have hurt more portfolios than helped them. Some NBFCs, the NBFCs have had a very easy ride over the last year and a half, as you know. But I think it's conceivable that there is a little bit of pressure which happens on some of them, particularly the ones which cater to the SME segment. You could see a little bit of market share come off for some of those NBFCs. I think the bigger issue is whether their net interest margins, because of competitive pressures, I think the PSU banks which get growth capital will become a bit aggressive on the pricing front as well. So not only the volume growth, I think a little bit of the pricing growth might come under pressure as well. So it's possible that NBFCs don't grow at that scorching pace that they've grown over the last 4 to 8 quarters, and that sort of takes the sheen of their very high or lofty multiples that they trade at. So further re-rating on the way up for NBFCs look unlikely. I think select NBFCs you might take profits in, given the kind of domain that they operate in. But I find that the market's pessimism about private sector banks and how much PSU banks can take away from them is vastly overrated. I'm not in the camp which believes that HDFC Bank is shivering in their boots now at the thoughts of Punjab National Bank and UCO Bank coming after them.
No, actually no, but I did speak to one of the private bankers, or in fact several of them over the weekend. Their point was just that, you know, the PSU banks had to keep aside so much for provisioning. Now that a large part is taken care of, that gave the public sector, the private sector banks, you know, sometimes 3%, 4 percentage point spreads. That easy spread is not there.
Oh, yes,
I mean, as Udayan said, the margins are not there.
Oh, yes. But anyway, Udayan, we'll come back to you. The market has settled in pre-open at 30 points higher and 34 higher on the bank Nifty. Ashwini, thoughts on market opening? Would you want to short here actually, and what would be your 914 call?
So no shorting. The opening is fairly lukewarm. We'll go back into Friday's range, at least on the bank Nifty. So Nifty will not be able to charge up ahead. So at higher levels, you know, some amount of profit booking is likely. 914 call, UPL you should buy with a stop of 820, target of 865.
Okay. Is there a trade on ICICI Bank, Ashwini?
Well, these are, if it's opening down, that's a poor response to what was apparently good results. So maybe ICICI Bank can give back a lot of its 14% gain that it's sitting on. But let's see how it opens.
Okay, just about 30 seconds left. Udayan, good morning. How did you read the Yes Bank situation? I mean, that big hole that we got in asset quality, and the market sort of subsequently, you know, buying at least a little bit of the dip.
Well, I'll answer that in 20 seconds, Surabhi, because the markets will open. I've had my apprehensions, which I've spoken about many times in the past with the quality of this management and governance issues. In a perfect world, this is cause for derating, but the market's been very forgiving of our private sector banks, and I don't expect Yes Bank to correct very significantly. In my book, give me Kotak and HDFC any day over Yes Bank.
Okay. Yeah, let's see. I mean, I thought a 10% cut and then the market was forgiving. What do you do when you have so much liquidity? You give it 1% more as of today. So that's 309 rupees on Yes Bank. But the honors today are with ONGC, 2% higher, obviously because of crude touching $60. Bharti Twins are also doing well. IOC probably giving it the fact that it's already risen from 280 to 301 over the past week, and therefore there's little reason to upgrade it until the Reserve Bank's report comes in. Dr. Reddy's, ITC, Wipro. ITC was expected, the volumes were somewhat lukewarm, and that stock also is down a bit. Kotak Mahindra, Cipla, Tata Steel ahead of its numbers are all a little quiet, but no complaint with the Nifty itself, up about 1/3%. And riding on the shoulders of, besides ONGC, the Bharti Twins, Tech Mahindra of all the IT stocks, Tech Mahindra and HCL Tech are the ones that are taking advantage of the global tech move. Maruti Suzuki, Sun Pharma, Yes Bank as well, Vedanta, Hindalco, Reliance are some of the stocks that are up almost 1%, give or take a little bit.
Okay,
Midcap's doing very well.
Midcap's doing really well, and I'll quickly run through some of the positive earnings, and largely what I'm reading out are good earnings reactions. So Ramakrishna Forging 12%, IFB Agro 9%, Tata Metallics 4%, Linde India, Dalmia Bharat Sugar was of course a stock that Mr. Tulsian pointed out this morning. It's a long-term bet for him. 4% up there. Interestingly, aviation stocks are actually taking this surge in crude prices, in their stride. There is no major red on the screen for Jet. In fact, Jet is doing very well this morning, about 2% up on Jet Airways. Interglobe and some of the other stocks are also holding up. Pain stocks like Shalimar, Berger, I was looking at the smaller pain stocks. Even they're absolutely fine. Right now, no major scare in terms of the crude surge. Some of the deal stocks, the Shriram Group stocks, Shriram EPC, Shriram Transport, they are up. IDFC is up about 1% or so thereabouts. The major result disappointment this morning would be perhaps Spark, down 3.5%. AU Small Finance also down about to 1%. So this is where pretty much some of the action is. What else? Stocks like Leel Electrical, Sponge Lloyd, there's a lot of excitement and flair depending on individual stock action, what you're looking at in the market this morning. So that's the opening. Mid caps outperforming the large caps for what it's worth right now, Nij.
Yeah, a couple of points. One is United Spirits opened a bit lower, but is trying to take out Friday's high. I think Friday's high becomes a reference point for United Spirits. So that's a stock that you would want to keep on your radar. We've been talking about ONGC. Last time crude crossed 60, the stock that really rallied was Aban Offshore, because that's also the one where you have quite a bit of benefit because of crude oil prices, and that's a directly linked business. So that's an interesting stock which has had a decent gap up. So that's also an interesting stock. And of course, Maruti is opening higher.
Inox Wind, we remember this on Friday as well. There was a major move. And again, it's about a 3-4% move today as well.
Yeah. Okay, Ashwini, your thoughts on market opening? It's actually way better than what the pre-open indicated.
Well, ICICI Bank after opening about 1.5% lower, that's coming back. So that way, the banks are kind of recovering, but it's still nothing to write home about. I would have bought Bank Nifty if ICICI Bank had opened up 4-5%. But overall, I think regardless of the banks, it's going to be a bit of a mid-cap day. PSU banks are kind of coming back. But again, the news was last week, not this week. So don't expect too much on the upside. But yes, if you have long positions, you can remain long.
Okay, Sudarshan, anything on your radar now?
Well, we are long in the Nifty and the Nifty Bank. I suggested going long in the morning, and that trade has been taken. There are two buying opportunities. One is Sun TV, and the other is Z Entertainment, both in media. I think Friday's rally should continue in both these stocks.
Okay. In fact, the stock that we were just discussing with Uday Yes Bank, it is one of the better performers of the morning. 1.5% up. So Udin, I'll actually come back to the point to get the other side of the story. If you are now looking at private sector banks and you're trying to figure out where the maximum amount of money could be made, should you at all be looking at an ICICI or a Yes, or as you said, that maybe it's just better to stick with staid stability of an HDFC bank?
Depends on your time horizon also, Surabhi. But the one thing which we must understand right now about the market is that there is a lot of attraction in playing the trade of the underdog because that's the thing which has delivered the highest return over the last month or so. So, you see the kind of violent pullback that we've seen in the telecom sector led by Bharti, then PSU banks. And I think the market's basically sussing out that very expensive stocks which had led this rally up to 10,300, there is reluctance to chase some of those expensive stocks beyond the point. The market's now looking for a bit of value, a bit of the underdog. And it's tasted blood with two of the sectors like PSU banks and telecom. It wouldn't surprise me one of these days, because of some good news, you see a massive rally in some of the pharmaceutical counters. Or the merest whiff of good news sends some of the IT stocks moving higher. And in that camp, I would place some of the stocks that you are talking about as well. So I think right now the market wants to play the underdog, and therefore in the banking space, of course PSU banks have had a massive rally. There is a chance that some of these corporate banks like ICICI Bank, where the results were not too bad, the market could be more favorably inclined to some of those names rather than getting HDFC Bank and Kotak and IndusInd Bank even more expensive. So they may plateau out for a while, and the expensive stocks might have to play a waiting game, and the underdogs might actually lead the market if it has to go higher.
Okay, do stay on then. The mid-caps are clearly the toast for the morning, and this Nifty, yes, up 1/3%, but staying there for the first 5 minutes of trade. Ashwini, is there a trade for the morning? Another stock?
See, basically, PSU banks are coming back, so maybe PNB is a decent trade, and also Jet Airways. Overall, I don't think Bank Nifty may be able to sustain its gains, post-afternoon.
Yeah, actually, let's just pull out the intraday chart of Jet Airways.
Yeah, what's happening?
I think something is up here, because from the move from 480 to here has been phenomenal. I think on expiry week, it had a big run. And today, as we speak, the stock's up about 5.5%. Ashwini, can it still be bought at these prices?
Jet Airways is coming out of a big correction. It went down to its 200-day moving average, 480, 500. So definitely can be bought here and could get back to 620 to 640.
Okay, Mitesh, anything on your radar?
Multiple things, Lata. I think Jet is clearly one of them. Very good intraday charts over there. I think this will definitely, good chance that this will go by about another 5-6%. But that about Dalmia Bharat, I think we had a call on Friday as well. I think showing momentum, I think should head towards 30-50 in the short term. ONGC and Tata Power also look very interesting. I think ONGC is heading towards 195. Tata Power, I think, has given a good breakout above 85. So 92, 93 could be a good target.
Okay,
right,
gentlemen, we'll come back to you after the market settle down around 10 a.m. Let's get back to Udayan then. Udayan, what about Infosys? Did you get a sense? I mean, the sense I got was that once again it's the imprint of Nandan Nilekani, under-promising and over-delivering. Could that lead to a bit of a bottom formation for Infosys?
I think Infosys has a bottom around 875-ish right now. I don't see it getting violated in a hurry. I mean, there are too many carrots now. I mean, there is hope of some kind of recovery. The bad news has been published up front, as you say, and maybe the company will try and outperform it. So it's settling down, and there is, of course, the carrot of the buyback playing out. Till that happens, the stock should not correct very meaningfully. I don't think the results were anything great to write home about. I thought HCL Tech was also a pedestrian set of numbers. So the numbers have not recovered for the IT sector. But, as I said, underdogs are coming back. So Infosys might be in a range of maybe 890, 900 on the way down on a very bad day, 950-ish on the way up. I think HCL Tech also will struggle to move very much higher from here, just in the near term. But the one mystery question remains, that if Nandan Nilekani and the board have given a clean chit to the Panaya deal, why did Vishal Sikka have to move?
Yes, that's the question everybody is asking. Well, finally, just your word on the earnings season so far. The best usually come out in the beginning, don't they?
They do, but, actually the earnings season has not been too bad, Lata. You don't want to get too excited, because some of these might still be, some of the margin improvements, particularly like we saw in Asian Paints, etc., might have to do with GST related adjustments. But I think many of these companies like HUL, United Spirits, Z, they've come out with fairly good numbers. I'm not talking about the ones which came before like Reliance, but these numbers have been quite encouraging. It's still patchy. I mean, there are names like ITC, IOC, HCL Tech, Havels, which have disappointed. But at this stage, halfway down the earnings season, it's not as bad as one might have thought in the second quarter. So I know a lot of results are about to come over the next couple of weeks, so we'll wait and hold judgment for that. But at this point, I think it looks more half full than half empty to me.
All right. Then always a pleasure having you with us. Thank you very much for joining us this morning. With that, let's invite our market master for the morning, Ratnesh Kumar, MD and CEO, Bobcaps, joins us now. Good morning, Ratnesh. Always a pleasure having you with us. Given your associates company, I think you are best placed to tell us how would you look at this bank recap, and how does that change your bets on NBFCs, private banks and public sector banks?
Yeah, so I don't have any particular sort of greater information than any other market participant, but I think the whole recapitalization was very positive and a bold move. The way I look at it is that it is positioning the sector overall to move forward and possibly trigger the next round of investment growth, credit growth, etc. And more specifically, I think if you look at the whole recapitalization, naturally it is going to benefit the weaker banks more, simply because there is greater need there. So no doubt that is what is going to play out in the short term. Over the 6-month period, what needs to be seen is how that leads to greater number of resolutions for the large NPA situations, and that's also going to be fairly significant for banks as well as the sector as a whole. Also, one thing to keep in mind is that when the state sector banks were somewhat hobbled, especially the weaker ones, you saw significant growth coming in from the NBFCs. So I think that is something that we have to watch out for. There is simply going to be more competition for credit, and to the extent that there is been greater of a valuation sort of overshoot in the NBFC, that will be corrected.
Okay, Ratnesh, good morning. So how do you approach your portfolio from here? Because clearly the market's message is very clear. You got to buy some of these growth companies regardless of the kind of valuations that they're trading at. Do you still chase that, or do you look for value in beaten down stocks? How would you approach portfolio from here on?
So portfolio approach is currently very challenging because you have a situation whereby a lot of the beaten down sectors, as was mentioned a little while back, have had a sharp comeback, be it on the banking side or on the telecom side. But the way I'm looking at it presently, the market is that the second quarter results are in effect a kind of a transition quarter. When the economy has been moving into the GST, so there is an element of destocking and restocking that is going to play out in the subsequent quarters. So yes, I think you have probably once again another year which started at 18-20% growth expectation and petering down to like single digit, like mid to low single digit kind of growth in FY18. So that being the situation at this point, the sectors which I would focus on, would be where there is still significantly good potential for growth. One of which is autos. Other is I would say gas utilities is another space which is seeing good growth at this point, and the rest of them I think will be a close watch from here on.
Morning, Ratnesh. What are thoughts on the consumer earnings that you have seen so far, and sort of what part of consumer would you still keep in the portfolio? What's the best pick?
So the consumer side of things, I would I think like to play through the discretionary like segment, which is more specifically autos, simply because on the staple side you've had the valuation run up and there is fair amount of resistance in the market at these kind of valuations, and also if we are going to start another cycle of credit growth investments over the next 2 to 3 years, then clearly I think the economy, cyclicals, domestic sectors are the ones to keep in mind, and consumer staples would be more on the other side of the spectrum. So I think instead of staples, for the consumption plays, I would like to sort of play through segments like autos. Sectors are the ones to keep in mind, and consumer staples would be more on the other side of the spectrum. So I think instead of staples, for the consumption plays, I would like to sort of play through segments like autos.
Okay, actually I was also going to ask you about consumption, but for the same reason as the first theme that we discussed. Private bankers now fear that public sector banks can cut rates. I mean, they had to set aside a large amount for provisioning and therefore needed larger spreads and margins. Now they don't need that much, say 6 months down the line. So they are expecting a rate war from the PSUs. How will you play that theme? First of all, do you believe that rates can fall, lending rates? And how do you play it? Do you play financiers or do you play consumption stocks, as Surabhi was asking?
Yeah, so I think on the rate side, firstly on the macro, probably you are, having a situation globally where the liquidity is tightening. So the possibility of the policy rates falling from here on for the rest of the year is
No, I didn't
low.
mean policy rates, Ratnesh. I meant lending rates of banks only.
Yeah, so lending rates for banks, because whole recapitalization process is going to play out over a period of time. So it's not something that is going to be immediate. Okay. I think more than the rates side of things, I think what you will find is more probably once the recapitalization plays out, more active players in the lending market, and to that extent competition for credit will increase. And naturally, when there is competition for credit, there is going to be finer pricing which could happen. And that would probably impact the NBFC sector more than the private banks.
Okay. Would consumption stocks therefore be, I mean, for instance, real estate, many of them are still dogs even after the recovery. Any of those people who will benefit if rates fell? No?
So real estate will, I think, take a while, because right now, if you see, the volumes are probably near all-time lows in terms of transactions, and there are other sector-specific aspects playing out there in terms of RERA, etc., all across the country. So there is an adjustment process which is going on. Naturally, the sector is beaten down, and we are seeing a fair amount of interest from investors in terms of looking at value there, of which there is. Certainly, there are some 2-3 sort of players in the mid-size segment, which are attractive within the real estate space. But overall, for the sector, it will take some more time to sort of adjust to the new regulatory regime. And credit is probably less of a factor there. You already have had a fair amount of growth in housing finance. It is more to do with the whole shifting of the regime and adjustment of the market.
Ratnesh, we were just discussing this with our other guests as well. The market's hunger for looking for underdogs or new ideas, and of course stocks that are not that richly valued. What's top of mind for you in that basket? I mean, are you willing to play the story on, let's say, pharma? Are you willing to go in for infrastructure now, given the developments of the last couple of days?
So I think I would not, like to sort of go towards pharmaceutical side, because there are, a whole lot of other factors at play, and to me the domestic sectors, the players linked to the domestic economy, to me look more attractive as a theme over the next couple of years. So instead of pharmaceutical, I think it is the EPC space that is where. EPC and infrastructure. So instead of infrastructure, I would like to sort of focus down within the segment of EPC. That is where you are seeing a good amount of activity which is picking up, and naturally there are big projects being announced and talked about. So some of that certainly will flow through, and also if you look at it, we are now in the second half of the term of the government. So naturally some of the infrastructure initiatives will be pushed through. So EPC is a segment to look out for within the infrastructure, in my opinion.
Okay, anything? I mean, I can't understand what's happening in Jet Airways. It's not making sense at all. So 7.5%. I mean, mean reversion is about the only logic that appears to work now.
There's the only incremental piece of news that I can share with you is that there was a Supreme Court hearing towards the end of last week, and this was a petition that was filed by Mr. Subramaniam Swamy. Okay. Certain contentions were made about favourable treatment and air rights with UAE and whether that should be annulled. And we know that UAE and Etihad are obviously important partners for Jet. So I don't know. I'm just putting some of the facts out in terms of incremental news. I don't know if that is enough to move the stock. To be fair,
even SpiceJet is up today. So none of them have been affected by the crude price increase. But Jet Airways is definitely something brewing over there. Finally, Ratnesh, what would be your pick of the pack when markets are at all-time highs and still reaching out to even higher highs? Where do you find space to buy?
So overall, market as a whole, I'm looking at it trading at around 17-18 times, which is probably around 10% premium to long-term averages. So overall, I think market as a whole has a little bit of a headwind in terms of valuations and not much earnings growth immediately. So within that, that story, I would focus on the auto sector and the EPC sector and gas utilities. These are the three segments which would be my favorites.
Okay, Ratnesh, thanks a lot for your time today. That's the view from Bob Caps. Just want to point out a couple of stocks. Nalco is an interesting one, which is now at the high point. I think Manisha was pointing out about alumina prices, so that stock is looking interesting. We've been all talking about Jet Airways. The other one that's seeing the highs of the day right now is Dewan Housing, DHFL. So a couple of interesting stocks looking up right now. We'll take a break.
Speaking of Dewan Housing, we are going to speak to the management.
Okay.